Hi, welcome to the channel. If you haven't been here before, my name is Langers and I am the Scruffy Trader. And what I'm trying to achieve is to put trading in the real world and show it how it can be done as a living. And these series of videos are just bite-sized chunks answering basic trading questions like what is RSI, what is Forex, etc. And they're all driven from the comments below. So if you have a question that you're unsure of, please just drop it in the comment section below and I'll make a video for you. And if you haven't been here before, please consider subscribing and click the little like button, because that genuinely helps and motivates me to do more of these. And if you're waiting for the next video, just click the little bell icon and it'll notify you when it's ready. That's it, guys. So I give a shout out to everybody who asked the question, and this one comes from one of our Facebook subscribers, Roy. And his question is, what is a Bollinger Band? Well, the Bollinger Band is probably my favourite indicator. And if I had a gun to my head and told I could only ever have one indicator, the Bollinger Band would be it. So what is it and how do we make some money from it? Well, I'll go get a coffee, because we all know Scruffy likes a coffee, and I'll jump on the screen and I'll break it down for you. So come with me and let's jump on the other screen. Okay guys, so what we're going to do, I'm going to show you a Bollinger Band on a clean chart. And this is a one I made earlier, because I don't normally have it like this. I've exaggerated the outer limits just so you can see it clearly. Now, basically the Bollinger Band was invented by a chap called John Bollinger, hence its name, in the early 80s. I'll not go too much into the mathematics of how it's made, because a quick Google search will give you the formula. But basically what the Bollinger Band is a simple moving average. Standard settings normally 20, which is this one here running through the middle, and then an upper line and a bottom line creating the band. And the band is often coloured, as you can see here, so that it's easily identified on a chart. And these two lines here, the upper and the bottom and the lower bands, are two deviations away from the center line, okay, or the 20 moving average. You can play around with it. You can set it to 10, you can set it to 50, you can move the deviations out from a standard setting of 2 to 2.5 if you want less signals. There's lots of things you can do with it, but I actually find the standard settings work best. And as I say, this is probably my most favorite indicator. But saying that, don't trade any indicator on their own. They need to have confluence with price action and a possible other indicator, an RSI or something like that, for example, which is my preference. So what are we looking at when you're looking at a Bollinger? Well, one of the first things to look for is tightening of the bands. This section here where it's nice and skinny. And what that's telling you is price is resting. It's not going anywhere. So the bands tighten up and you're waiting for it to flare out, which it does here. So this is one of the first ways to do it. So you're looking for a break and a flare and it to hold above this line. And as you can see, as it's flaring out, the price moves up nicely. But this needs to be, as I've just said, you need other factors to look at to ensure that that's going to go up that way, like an oversold on an RSI in this section here would help you do that, or a stochastic, something like that. Okay, so that's the first thing you can look at. But the most popular way of trading a Bollinger Band is from a piercing of the Bollinger Band, because that happens quite regular, and it's normally a good indicator that the price is about to turn around, because you'll often hear me in other videos say the price is overstretched. And what that means is the price is basically getting quite far away from the moving average. And it can't do that indefinitely. It will run out of steam and it will come back to the center ground. So as you can see here, it's burst through, it's holding out, still holding out, but as it unwinds and it closes inside the Bollinger Band, it does try to go back to this center line. So that would give you a decent move. In fact, let's have a quick look and see what that would be. So if you put an order there to there, that will get you 10 pips. So if you're day trading and you're looking for a 10 pip, there you go, there's a 10 pip move there, right there. Price moves up, pierces it, pierces it, pierces it. There's your first bar closing inside. And again, you could put an order underneath it. And sure enough, there's another 10 pips. Okay, nice and simple. Price follows up, pierced it, closed on the other side. So this is quite an interesting play, because that's telling you the price is going down, and it has, but it's also pierced the other side. So you're now looking to go the other way, pierced it, closed back inside, and lo and behold, it's gone back up. Pierced it at the top, this one comes over, closes back inside the Bollinger Band, and it tries to go back down, and it does. So you'll get a good move there. So you're following the price down, it's pierced the band again, pierced, there it is there, it's wanting to go up. So if you put an order there, it would clip you there, you would sit on a little bit of heat, but sure enough, it's gone back up. And that's what you're looking for all the time. Stays inside, it's pierced, closed inside, that didn't pierce, so you would still have your pending order on. It's turned around, tagged your order, and gone up. Nice and simple. And as you can see, it does it over and over again, and that's just a little snapshot. But if I scroll it right back, just out of the way, see it, and you'll see this over and over. And there we go. So there we are. Even though that's a strong uptrend, there's no denying that's moving up. But look, it's pierced it, it's closed inside. That's not such a good trade. But it's pierced it, closed inside, wallop, down it came. And there you go. Now, when you're looking at price action, see here, you would identify that that is moving up, and you would wait for it to come to this other side and then enter to carry on that move. So that's another way to do it. And the final way of looking at a Bollinger Band is waiting to see the price bounce off the moving average. So it's closed above the moving average, you go long and you hold it till the first close inside. So you enter here, you let it pierce the band, or you're waiting for it to pierce the band rather. Comes up, and then you would close it out there. Okay, comes down, tags your moving average, and again, and you follow it through. And your stop placement on something like that would be on the other side of the band, sort of running it here. So on this instance here, it's come down, it's tagged your moving average. So you put your order in here, stop loss would be here. It would tag, that wouldn't trigger your stop loss at all. You move up, come down, move up, come down, and you just hold it for as long as you can. You know, there's lots of different ways you can use the Bollinger Band, and they're just some ideas to help you. Personally, the way I trade it is I look for a direction on a higher time frame. So I'll find my direction off a daily or 4 hourly. And then what I'm looking for the price to do, if I'm going long for argument's sake, I'd be looking for these pieces on this side of the Bollinger Band. So there, there, there. Possibly this one as well. Because basically all it's doing is it's showing me the price is unwound. And if I believe it's still going up, I'll enter, safe trade. And it's much safer to do it that way. And likewise, if I was going short, I'd be looking for it to pierce the top band, and then I'd be looking for the reversal. And that's all Bollinger Bands are. They're just a good eye shot to see where there's a possible turning point, and you enter on the opposite side to the direction you're going to trade in. So like I've just said, if I'm going long, I will wait till it pierces the bottom band, and then I'll enter my trade. If I'm going short, I'll be looking for it to pierce the top of the band. And that's it. It works on any time frame, but I find 15 minutes and above works best. Because once you get into the realms of 5 minutes, there's too much whipsawing around, and it doesn't give a clear signal. If you've got this on an hourly chart, as this is, they're quite strong, because when it moves, it'll move a decent amount. And that's what we're looking for as traders. You know, there's no point taking 2 or 3 pips out of the market. You want to be looking for 10, 15, 20. And then it's worthwhile. Okay. Great tool. I use it every day, and it's on every single trade that I take. And that is whether I'm day trading or whether it's on my swings. I always look at a Bollinger Band to see how far the market is stretched. And if I've got to wait, then I wait. Simple as that. So, little quick one for you. I hope that kind of makes sense. If you want it cleared up, by all means, drop a comment below. Find me on my blog, and I'll try and answer it a little bit clearer. Okay. But anyway, in these weird and wonderful times, stay safe, everybody, and remember, do what you love, the money will follow. I'll see you on the next one.